Present Alberta's results for the fiscal year ending March 31st, 2025. In February 2024, when we released Budget 2024, we knew we were in for a challenging year. Due to our competitive advantage, Alberta is a destination of choice for both Canadians and people from around the world. We all know Alberta is a great place to call home, as it's one of the most affordable places to live, work, and raise a family. Our low-tax environment and solid economy help Albertans get ahead and plan for the future. However, a growing population brings growing demands. Albertans need access to hospitals and health care, schools for their children, and safe roads to get them where they need to go. That's why we released Budget 2024 as our responsible plan for a growing province. And over the fiscal year, we rose to meet those challenges, even in the face of a changing geopolitical environment and economic uncertainty. Economic growth was steady as we focused on building an economic foundation that positions Alberta for the future. Over the last year, our economy grew at a strong pace. Oil production climbed to a record high of almost 4 million barrels a day. The average price of oil was $74.34 per barrel, slightly higher than the $74 projected at Budget 2024. Rig drilling activity increased by 4.4%, and natural gas production also increased despite weaker prices. Activity in the housing market also surged as Alberta remained the fastest growing province in Canada. We experienced our second year of rapid population growth. Many of these new Albertans moved from other parts of Canada and from around the world, attracted by Alberta's thriving economy and entrepreneurial spirit. Last year, we added 200,000 people to our province. That's like adding another Red Deer and another Airdrie to our province. That's a lot of Albertans, and that means a lot of services are required to keep up. That population growth outpaced job gains, so while the unemployment rate rose slightly to an average of 7%, Alberta added 76,300 jobs to our economy in 2024. This is significant and meaningful growth. With that context in mind, let's take a look at our year-end results. In the 2024-2025 fiscal year, revenue was $82.5 billion, and expense was $74.1 billion, leaving us with an $8.3 billion surplus. That's Alberta's fourth consecutive surplus in as many years and $8 billion higher than estimated in Budget 2024. Revenue was $8.9 billion more than budget, largely due to higher than expected revenue from energy resources, personal and corporate income taxes, and investment income. Resource revenue increased to $22 billion, primarily driven by higher bitumen royalties due to a lower exchange rate and a narrower light-heavy differential. Personal income tax revenue was a record $16.1 billion, or $516 million higher than budget, driven by strong growth in personal incomes and population. Corporate income tax revenue was $8.1 billion, up $1.1 billion from budget due to strong corporate profits in sectors such as oil and gas, construction, and finance. Alberta's low-tax environment is working and should continue to attract investment and jobs, helping to secure Alberta's economy. Of note, we also recognize the first portion of Alberta's tobacco settlement to help us recover health care costs related to smoking. This provided $713 million as revenue in the 24-25 fiscal year, with more annual payments coming in future years. Tobacco use has had a significant impact on the quality of life of Albertans, placing a considerable burden on our health care system. While this settlement represents only a small portion of the healthcare costs for treating cigarette-related illness, we believe it represents the best possible outcome following years of litigation. Turning to expense in 24-25 was $74.1 billion. This was $1 billion higher than estimated in Budget 2024, with increases for healthcare, education, and emergency assistance. We spent $702 million to fight wildfires and provided millions more in matching donations, evacuation payments, and disaster recovery programs. Another $1 billion supported producers, farmers, and ranchers facing ongoing drought conditions through many programs, largely insurance. As promised, we made significant investments in healthcare and education. We boosted health funding as the province began refocusing the health system around the needs of patients and families. More funding for education helped schools address enrollment growth. supported more teachers and support staff, and increased learning opportunities for vulnerable students. And we spent $7.2 billion on our capital plan. This year was notable as we launched the School Construction Accelerator program that will create about 200,000 new and modernized student spaces in the years to come. Over the last year, we completed 2 health facilities, 12 new schools, and dozens of road and bridge rehabilitation projects. We also continue to prioritize Albertans struggling with mental health and addiction by supporting the establishment of 11 recovery communities. Investments in the capital plan help to support jobs, attract skilled workers, open up local economies, and grow communities. After final calculations and adjustments, we ended the year with $5.1 billion in surplus cash. We have clear rules that guide our use of surplus cash. As legislated in the fiscal framework, half, or $2.6 billion, of the surplus cash must be allocated to improving the government's net financial position through either debt repayment or savings in the Alberta Heritage Savings Trust Fund. The remaining half goes to the Alberta Fund. Those funds can be used for further debt repayment, additional savings in the Heritage Fund, or one-time initiatives that do not permanently increase government spending. On March 31st, 2025, the Heritage Fund's market value was $27.2 billion, its highest value ever. This includes net investment income retained in the fund and our investment of $2 billion from Budget 2024. Taxpayer-supported debt was $85.2 billion as of March 31st, 2025, $3.4 billion higher than at the same point last year. That's because we made a strategic decision to pre-borrow for debt maturities that come due early in 2025-2026. Debt servicing costs were down in 24-25 to $3.2 billion, as the higher surplus meant we borrowed less than originally planned. Due to forward fiscal planning, Alberta continues to be the least indebted province in the country, and we intend to keep it that way. Our year-end results are solid, and the surplus is good news. But as you know from Budget 2025, we're forecasting deficits for the next 3 years, and we must be prepared to weather the storm. While oil prices have fluctuated in past weeks, ongoing unrest and geopolitical uncertainties continue to keep the price of oil unpredictable. We continue to experience trade uncertainties with the United States, and the tariff situation will certainly impact our revenues. Our growing population also creates challenges as we strive to make sure every person has access to health care, schools for their kids, and other public services they need. We must always keep our neighbours and communities safe as we face unpredictable but inevitable disasters and emergencies in the future. In Alberta, we face our challenges head-on, and our government has a strong plan to meet these challenges going forward, even in uncertain times. This is why responsible fiscal management is so important. Last year, we rolled out a responsible plan to provide for our growing province. We invested in the priorities of Albertans, strengthened health care and education, and kept people safe, even as wildfires tore through our beloved mountain town of Jasper. This year, we continue that work. While today's focus is looking back at last year's results, we must continue to make measured choices with Albertans and their futures in mind. Budget 2025 is meeting the challenges facing Alberta with responsible decisions that support and sustain public services. Our prudent plan keeps more money in the pockets of Albertans and their families while solidifying Alberta's economic foundation. We're investing where it counts today and saving for a brighter tomorrow. Thank you, and I'm happy to answer some questions.
All right, thank you, Minister. And now we'll move to the media question and answer period. We have time for one question, one follow-up. I'd ask the media to identify yourself and your outlet before asking your question, and please move to the mic if you would like to start. All right, go ahead.
Hi, Minister. Adam McVicker with Global News in Calgary. Can you walk us through just the difference? I believe it's a significant deficit next year, multi-billion-dollar deficit in Budget 2025. How we go from such a large $8.3 billion deficit or surplus in 24 to multiple years of deficits moving forward.
No, thank you for the question. So I think this is probably hard for people generally to get their heads around, but each fiscal year is a chapter in an ongoing story. And although a lot of the pressures remain the same, one thing that's always different, especially in Alberta's circumstance, is around the price volatility of oil and these other sensitivities. So in budget 24, we'd predicted WTI to be at $74, and it came in at $74.34, which is pretty amazingly close, I would point out. But we also saw a tighter differential than predicted. We were on the right side of the currency forecast. When we look at budget 25 and the $5.2 billion deficit that we tabled, that was with oil at $68. So $6 difference right off the top. And our sensitivities forecasted in budget 25 are about $750 million for every dollar difference in WTI. And that's increased. In budget 24, that was about $630 million. So as we have more bitumen oil sands facilities reaching maturity, that number becomes even more dramatic and impactful. So a lot of it is built into those sensitivities around the price. We were at $68 for this year, which is below industry average forecast. And you've seen what oil's done since I tabled the budget. We've been as low as 55. We were as high as 78 only a week ago, and now back down to about 65 today. So that is the driver of a lot of this fluctuation and unpredictable. Yeah.
How much, as well as the situation in the United States, playing into the forecasts coming up? The president tweeted or posted a little while ago that he's cutting off all trade discussions with Canada and threatened introducing a new tariff in the coming days. So how much does that uncertainty play into this deficit situation as well?
Well, we're going to have to wait till the end of August to update you all on the first quarter when we actually have some data behind it. But I would share with you, we definitely see that it's chilled investment across sectors. Any place that there's a final investment decision that hadn't been made previously, it's basically on hold. They need more certainty than this. One thing I would say that's in our favor is something that this surplus being larger than expected represents, is that the economic handoff between last fiscal year into this one was stronger than we expected. I think that's definitely good news for this year. And to date, the tariff situation has been a lighter touch than we forecast in our baseline for budget 2025. So those things are in our favor, but the uncertainty is definitely chilling investment.
All right, thank you. And the next question in the room?
Hi, Minister. Edward from City News. I know in this fiscal year's budget, you have an average of about a 15% tariff rate. What happens if tariffs that are leveled against Canada are above that 15%? It'll
hurt more. Basically, we brought in 15% across the board and 10% on energy. To date, we haven't seen that. But if it's more impactful than that, I think in the budget we also had kind of a high and low case scenario that showed how dramatic the change would be. So it would be substantial.
And how does the province move back to balance once those tariffs, if they are imposed?
Well, that's the big job in front of us, is getting back to a path to balance. Like, not only did we table a deficit in budget 25, but you saw that we're projecting deficits for the 2 years that follow. And it will be more challenging if there isn't uncertainty, if there isn't more certainty on the trade file and this volatility we see in geopolitical concerns driving the price of oil in different directions.
Thank you. Are there any other questions in the room? No? With that, operator, can we please go to our first caller on the line?
We have a question from Emma Graney from the Globe and Mail. Your line is open.
Yeah, g'day, Minister. Thanks for taking my question. This kind of riffs off of what Adam was asking about, but this idea of energy revenues, and you've made this kind of comment, but how worrying is it that you're seeing all these geopolitical challenges? We're seeing oil prices just go completely wacky. And how do you factor in all of those challenges to become more resilient as a province when you're relying on, on oil prices and that resource revenue?
Well, I think it really shows why it's so important to forecast conservatively. I think first and foremost, Yeah, I don't want to see those numbers elevated in a way that just gives more downside potential risk to the province. We need to come in with conservative forecasts, and over time that will allow the province to be in a surplus position more often. But back to the theme of your question, I view this, we had $22 billion in resource revenue this last fiscal year, and we've been in and around 20 the last few years. I view that very much as how we're able to have a $20 billion tax advantage over the next closest province. So although we have this volatile revenue in oil and gas and resources, we can't forget what a great opportunity that is for us. So we have to manage this. We have to manage the downside risk. We have to spend wisely, in the good years and bad, and that allows us to not have to react too quickly and cut spending in a deficit year if we can watch our operational expense line in the good years. But truly, it's a blessing to have this unique challenge around our revenue, and it gives great opportunity to all Albertans in paying less taxes and keeping more money in their pockets. We could do something different. We could take up that space and increase taxes, but that's certainly not what I hear from Albertans they'd like us to do. So it's a challenge, but it's a good one.
Thank you. Any follow-up?
Yeah, just on the question of pipeline, it's come up a lot, new pipeline to the West Coast for crude. I mean, are you factoring that into budget at any point soon, or what are you hearing when it comes to negotiations there?
I just know that the negotiations are ongoing around, how do we get to the finish line on some of these nation-building projects, seeking new markets, egress for our products. Definitely nothing in Budget 25 reflects any of those costs, but I do think there's a lot of cautious optimism in working with the new federal leadership, still saying a lot of the right things behind the scenes, but eventually they'll have to show us that in actual policy. We're not thrilled with C5. I'm not hearing from the investment community that they think that will bring more certainty to investment in this space. But definitely we want to give them a little time and work with them as much as possible to land some of these projects.
Thank you. Any follow-up? Sorry. Moving to the next caller on the line. Operator, please put them through.
Graham Thompson from the Toronto Star.